Okay, so what should you, the investor, take away from all of this as we head into September? As we've mentioned, a historically bad month for stocks. Let's ask the experts. Larry Haverty, Associate Portfolio Manager of the Gabelli Global Multimedia Trust, and Yu-Dee Zhang is Principal and Chief Trader at Ace Investment Strategist. Great to have you both with us. Larry, you're feeling bullish. Tell us why you're feeling bullish going into September.
Yeah, I think, man, the problems with the consumer are vastly overrated. I think there are two elephants in the room that people need to consider. First of all is the level of debt at the consumer. There's talk about the stock of debt, but the reality is you have to look at the flow of debt. And debt service costs are down, variable rate mortgages are down, full rate mortgages are down. The consumer is saving a lot on interest. Payments are at very, very normal levels. The second thing is when people look at consumption, they assume that the United States is a closed system. It's not. We hear a lot about the dollar being weak, and the reverse of this is the U.S. is the best place in the world to shop now. For a Chinese in the mainland, I think U.S. is about 40% below his or her prices in Beijing.
Is that going to drive
and visitors
M&A,
from abroad are coming in.
Is it going to drive M&A? Do you think we're going to see overseas companies come in and shop a lot more for our companies?
I think it's virtually inevitable. I think the first to come is the Swiss because they know that they're dealing with a very, very overvalued currency. I mean, I'm looking at Nestle maybe doing things like that. But meanwhile, American consumer companies are cheap and their earnings are good.
Yu-Dee, the laws of physics would suggest after a down month like we've had that you would think we would get a bounce back in September. Do you think that's likely to happen?
Yeah, we are. We are actually in the middle of a bounce already. While I don't disagree with your previous guest, on the other hand, for every single positive factor you could give me, I could counter you with a negative one. That's why the market has been oscillating. And the way to do it, I think, is twofold. One is that you cannot chase this market. You will have to sell high and buy low. Find the depressed sectors and buy it on a correction. And the other way to do it is taking advantage of volatility. Volatility, using the VIX index, it's been sort of oscillating between 22 on the downside to about 42, taking away the aberration on the upside. So you need to sell the high volatility and buy the low volatility. I think that's the way to.
Am I right in thinking as well, Yu-Dee, that you like Bank of America, but more as a trading play as opposed to a long-term play?
Absolutely. I really love Bank of America, especially at about $6, and that's when we started buying. At $8.80, I'm actually ready to take some profit and waiting for another pullback before I buy again. I think Bank of America is more of a trading vehicle these days, more of an investment vehicle are the international so-called hegemons, the Coca-Colas, McDonald's, the ExxonMobils. They're the ones maybe buy for the long term, and stocks such as Google, Apple, and even Bank of America are more of a trading vehicle that you need to buy low and sell high.
Larry, what would you be buying right now?
Well, I think we can find some situations where the earnings are exploding and the valuations are low. Two of them, first is Las Vegas Sands, where I can assure you there's no problems in Macau. They're going to report 50% higher volume. They're doing $3 billion a month of gaming revenue there. That's a staggering number for a place that really didn't exist 10 years ago. Las Vegas Sands is the biggest real estate holder there. They're expanding. Stock's probably 11 or 12 times next year's cash flow, and they have very, very favorable taxation on their foreign earnings. Second one is DirecTV. I think we've got great management in Mike White, who came from PepsiCo. We also have great coaching in the form of John Malone on the sidelines, and they have 30% of their cash flow coming from Latin America, particularly Brazil, where it's growing 30-40%.
Okay.
They're buying every excess dollar of cash flow. They're buying stock.
Larry.
Stock counts down about 40%, 6 times.
Larry and Yu-Dee, thank you so much for joining us today. Well, the Department of Justice moved to block the companies